Gautam, Director, and Mr. Dhruv Mathur, Chief Financial Officer. With that, I pass the call over to the management for the opening comments. Over to you, sir.
Thank you, Vismay. Thank you very much for hosting this call. And I really welcome all the participants who are there. I understand that there is a large number of you there. I know that we continue to be in these crazy and endless corona times, but I think the whole country in general and we in particular have found our ways to go around it and continue with the economic activity. To the best of my understanding and knowledge, and specifically to our industry, most of the markets are open and completely approachable, and there is normal activity that is going on there. I know that there is a talk of this second wave and third wave that is happening across the world. In some cases, it is already peaking in those areas. In India, at least in the northern part of India, we do look at winters coming in, and somewhere there is a belief that in winter the virus grows or expands better. It may be because of people clustered together into rooms, or the temperatures are more suitable for it. But whatever may be the reason, we are well prepared for it. At least in the company, I can assure you that both at the manufacturing side as well as our exclusive outlets, we have taken out special initiatives to ensure that we do not support the spread of virus. I'm also aware, and this is something which is redeeming, is that the vaccine appears to be in sight. There are a couple of announcements made that by the end of this year or by the early part of next year, the vaccine will be out in the market. I know that the next level of challenges begin, which is distributing it, reaching it out, the cold chain to be created, etc. I would also like to share with you the two geographies that we are present in and how is Corona faring there. So Australia is relatively mild. They have 8 to 10 cases coming in every day, and they have completely sort of insulated themselves from the world. And so that's very well in control. At no point of time did the factories close or the markets close, but the life within the continent is normal. Spain, on the other hand, is not that good. It's part of the European Union. It has just experienced a lot of visitors, who come to Spain for the summer holidays, and the culture there is a little more loose or weak compared to the more disciplined countries. People are far more tactile, and therefore the corona is spreading good and fast. And now I understand that there is a curfew, which is in most of the cities, and all intercity travels are banned. But we are fortunate to be in a very small city called Yekla, and that city is well in control, and everybody is good and fine on that. This corona, what kind of impact it would have on us, I just want to say that it's not over as yet, and therefore there is no conclusive thoughts on it. But one thing for sure, that global trade will go down, which means that whether it's the movement of inputs or it's a movement of products, they will be lessened because each country has spent a lot of money into job protection, which has created deficits in the countries, and I'm sure that people would like to stay like this for a while and not really let money kind of go. So that's one impact as we see. Another impact, at least in our own business that we see, is that there is this new concept of bed in a box, where foam mattresses are kind of compressed and transported and reached to the areas, which saves on transportation cost, as well as it saves on the middle channel cost. So they are in vogue. They used to be about 10-15% of, let's say, the U.S. economy. And I understand that now it's gone up to almost 25% of the, not the economy, the mattress economy. U.S. has been importing a lot of these products from China and or other areas where the Chinese manufacturers went, like Vietnam and Cambodia. However, recently China has put some kind of restrictions, US has put some kind of restrictions on these products, and there is an additional dumping duty which has been levied, and therefore we see that as an opportunity opening up for India. We already have received many inquiries. We are catering to some of them from India as well as from Spain. So that's a good thing that has happened, and we expect that market to grow in the coming times. We continue to have a strict vigil in all our premises, and this I just want to assure you that even in the coming times when the vaccine is also out, we will continue with the social distancing and with all other kind of protections that is needed so that the factories continue and the exclusive channels continue. We are practicing work from home or a hybrid culture at the moment, which is 3 days from home and 3 days from, but these are also guidelines or guiding principles. We are not fussed up on that, and we leave it to the heads of departments. This is just to reconfirm and restate that safety and human safety, personal safety is absolutely uppermost in our mind. I just come to the next big one, which is creating a lot of waves in our industry, and that is the raw material prices. So undoubtedly, the raw material prices have shot up. In fact, right now in the last 3 months have almost doubled. The primary reasons for them is a continuing lazy kind of supply chain, and the belief of the raw material suppliers was that the pickup of the foam industry as well as the mattress industry will not be so quick and so fast. There are also mismatches between the two major chemicals across the world, and which is a part of the supply chain. But I think it's all beginning to come into some kind of an order. Our understanding is that up to the end of this calendar year, that is up to December, there should be a high price, and then from January, February, it should really start going down. And as you would have seen in our postings, that this time it was not TDI, but it was polyol, which used to always be reasonably stable, of course, moving in a small band, and that's shot up, and it's at the same price as TDI. As a response on our side, we are trying to indigenize. We are trying to tell the raw material guys to have tankages here, and even discussing with GNFC, which is our local TDI producer, that how can we increase our share with them, and to see that we are less and less dependent on this supply chain. One thing which has further happened in the raw material side is that there is an application by the local raw material producers for the levy of an additional dumping duty. That has been contested well at the courts, and at the moment it is in between or just before the final hearing and the final vote is given, but the government has been constrained not to issue the notification. So let's see how that. In these uncertain times, our response has been or our actions at our end have been just better and tighter management, closer management, more centralized decision making, continuous contact with both our vendors and our customers, and even our showrooms. We have been holding webinars and informing them and keeping in contact with them, so that this period is not a complete blackout or a washout as far as networking is concerned, or relationship is concerned, or any kind of interactions are concerned. Whatever have been this increase in the prices, we have been able to pass on some. I would say majority of it. Markets have taken it well. We have also absorbed something. But let me say that these high prices, they tend to have a long-term, not so good effect. But fortunately, we all believe that this is going to go away quickly, and it is only a little bit of a blip that is there. We are, being old and in this industry, have also interacted with our entire supply chain, raw material suppliers, processors, formers, customers, just to say that let this raw material blip kind of pass away. Please absorb whatever you can, and let's ensure that there are no irreversible or permanent impacts happening on account of this sharp increase in raw materials. Coming to our results of the second quarter FY21, they are better than expectations. Now that all markets are open, all activities are on, we believe that the response from the markets has been better than what we thought. On the B2B side, there is a kind of a mixed response. The auto industry has done very well. On the other hand, the shoe industry has been languishing, and I think that is because most people have been spending times at home. Schools have not opened. Plus, probably for most of us, shoes is like an impulse purchase, and we are holding on to that. Just on the macro numbers, of course, you have received the details, and we would be happy to answer any questions. But on a macro level, on the consolidated side, the total sales have gone up by 22%. A reasonable contribution is also from Spain, which was not there last year. Spain the company was acquired on 14th October, and therefore any kind of comparisons would begin only from the coming quarter on that. So total sales going up by 22%, Ebitda also going up to 17.5%. The Indian sales remained reasonably flat. I mean, a little bit of a 2% increase, but the Ebitda went up to 14.8%. Australia did extremely well. The top line went up by 20%, and the Ebitda has also gone up to 20.44%. Spain, I just said, the top line will only come in the coming quarter. That would be additional. But the Ebitda percent was also high at 24%. Some of these Ebitda percentages may appear as a little bit high at this point of time. Of course, we are making all our efforts to push that forward or push that upwards. But the impact is that there is a hard closure to a quarter, while the price increases and the raw materials and the stocks and the selling price increases, all these things happen. There is an interplay of all these things, and these things happen at different times, and therefore, there would be an impact which would be kind of carried forward into the coming or the ongoing quarter. We, on our part, have not forgotten the CSR activities, and our foundation continues to work on that. Our contribution to the society as far as quarantine beds and etc. are concerned, those continue. The webinars from the foundation on emotional wellness, that continues, and even we have had some online classes, more for the lesser fortunate people, as well as for areas which are very remote, for the northeast part of the country, etc. One part before I close and open up for questions, one thing I just want to say on the mattresses, which are our major products, that we believed that mattresses were a non-essential type of a product. But our information from Australia, from Spain, and now from India is that people have become more conscious during the corona times of the mattress that they sleep on. Of course, there is a pent-up demand. Of course, there is a little more money in the pocket because of not traveling, because of not vacationing, as is probably in Australia. But the time that has been spent at home, a realization on the home improvement products or on home products like mattresses and sofas and televisions and all that, the consciousness has gone up. And that is good for us and our...
Hello. Sir, I'm sorry to interrupt. We're not able to hear you.
Corona would also go away quickly, and we are able to handle that. So thank you very much, and we are now open to questions.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1 on your touchtone phone now. We have a first question from the line of Naresh Vaswani from Samiksha Capital. Please go ahead.
Yes, sir. Thanks for the opportunity. Sir, in the mattress, how much percentage of volumes came from low economy products, which we have Starlight and Feather Foam? And what kind of gross margins do we make in these low price products versus our premium sleepwell brand?
Dhruv, can you please take that question of Naresh, please?
Yeah, actually, we are not categorizing it in different kind of categories. We report the consolidated numbers. We were doing that earlier, but that has some impact on our competition. So we can only share the numbers on consolidated basis. Saying that of course, on gross margin, the gross margin is highest in sleepwell. However, coming to Ebitda levels, the Ebitda levels are almost same in all the categories.
Okay, and volume data you don't share?
We don't share on low price, high price something. That we discontinued long back because of our business reasons.
Okay.
Maybe, Dhruv, you can just give a general overview on it. I know the specific numbers we don't share, but a general overview of how it has been moving.
So I think there is an increase in low price mattresses generally because the shift is taking place from unorganized to organized. So the movement is, in terms of volume, is more on low price products.
So,
yeah.
Sir, we try to market these products.
Your voice is not very clear. Hello, can you repeat your question?
I am asking, do you plan to aggressively market these products versus our premium brand, which is there, as volumes and market would be much higher in these low price products?
So we are aggressive in both the segments. I'm just answering that from the market point of view, since there is a shift from unorganized to organized, within our share, the increase in low price products is slightly higher. However, we are aggressive in both the areas. Hello.
Do you have any further questions, Mr. Vaswani?
No, thanks.
Thank you. Ladies and gentlemen, please use the handset while asking your question. We have next question from the line of Nihal Jham from Edelweiss. Please go ahead.
Yes, thank you so much. And first of all, congratulations to the management for the wonderful performance. Sir, I had two questions from my side. First was on the demand recovery. If we remember our last conversation during the Q1 call, we mentioned that till August, I think the recovery was around 80-85%. So I just wanted to sense that specifically what has driven such a sharp improvement for the quarter, and I would assume that a lot of it has come in September. And how sustainable is this? That's my first question. I'll take the second one after your response.
So, yes, you're quite right that the major part of that has come in September. And as I said, that very little of it, to my mind, is pent-up demand. More of it is the consciousness which has happened regarding the mattresses, about people sleeping at home, not going out, not traveling, etc. And of course, the extra money that they had in pocket. And probably the last contributor to this would be this shift from the unorganized to the organized. So we have been talking about this unorganized to organized from the time of demonetization and GST, etc. But here, it is just the feeling that people are having that I must get a better product. I must get a product which is delivering more benefits, which are being guaranteed, which is from a good brand, etc. So I think that shift is happening. Clearly, it is happening, and therefore, on the sustainability part, I would say that most of it is absolutely sustainable. I see that happening in Australia, which is a completely mature market and probably a saturated market. But there too, because of the consciousness that has come in while staying at home, the sale of mattresses, etc., have gone up here.
That's helpful. Just a follow-up on that, sir. So is the sales at a end retail, not just the distributor level, similar in September to what we did at the company level, or there is some kind of stock filling which happened because of limited stock in the system?
So, Nihal, for us and our products, whether it is foam or it is mattresses, they are all voluminous products. Plus, please also accept that we have a lot of diversity as far as the sizes are concerned. And therefore, for anybody, of course, there is still little bit of stocking that can happen. But beyond a certain limit, they can't stock. And I would agree with you that, during the period and the time that we were not manufacturing, whatever was some kind of stocks in the channel, and the markets may not have opened, but they were slowly depleting. And therefore, there is a bit of stock filling that may have happened. But in our case, beyond a certain level, it just cannot. And we do have systems of measuring the sales from the company to the distributor, the primary sale, then the secondary, which is distributor to the dealer, and also the dealer's tertiary sales. And there is positive movement in all of that. They are comparable.
Sure. Last question from my side, sir. I think you've been pretty accurate in terms of your raw material price outlook earlier also. So in the opening remarks, you did mention that till December you expect prices to be high. But if I had to ask you, what would be the ideal sustainable level both for a TDI and polyol? And a follow-up to that would be that how are we planning to negate that in the longer term? And that would be it from my side.
So, listen, the raw material prices that we had many months back let's say before the lockdown, was also not sustainable. And what is today is also not sustainable. The correct, I won't say correct because there's something like that, but let's say the band that TDI should be, where it is beneficial to the producers to produce and for us to consume, is 150 to 170 number. So let's take 160 rupees a kilo as something which would work. For polyol, it is lower. It should be somewhere around 115, 120 level. 115 would be a good level for the suppliers as well as for the consumers. They would be economically viable, and that's what it should be.
Sure, sir, that's helpful. I'll come back in the queue for further questions. Thank you.
Thank you. We have next question from the line of Siva Kumar from Unifi Capital. Please go ahead.
Yeah, thank you for the opportunity. Sir, the good traction that we got to see in September, has it continued in October, and is the festive season looking really good this time?
Shiva, thank you for that question. We may be constrained to give exact numbers or answers, though October has finished. But let me say that the good work is continuing, and we are expecting the season to be good.
Great to hear that, sir. Sir, and given the current prices of TDI and polyol, is there an immediate threat to a 14% Ebitda margin in Q3? Because you also taken some price hikes parallelly, so that's why I'm asking this question.
We have taken the...
I think your voice is gone, Rahulji.
Dhruv, sorry for that. Dhruv, can you answer that question, please?
So, Shiva, we can't answer in terms of what is going to happen. But as Rahulji has already stated, that we have taken a price increase. And we also realize that this increase in raw material cost is not permanent. And in branded stuff, you cannot reduce the prices. So we are very conscious of this fact. And you can interpret it your way, how the Ebitda will move. But I would say that this will go back to the normal situation once the raw material prices are stabilized.
Got it. Sir, and Rahul sir, last time you promised to quantify the export opportunity in the Q2 call. Would you be doing it now after the trial shipment that you have done?
Shiva, let me just say that it's still very early times here. It's still very early times. The inquiries are there. One or two shipments have gone, both from India and Spain. It looks very promising. But to try to quantify it, and when I say quantify it, I would probably need to, I think what you are expecting is some kind of numbers for the January quarter, as well as some kind of numbers for 21-22 year. Give us a little more time on it. I mean, okay. It's looking promising. It's gone. We are getting used to it. You see, why I'm hesitant to speak, that there are challenges which keep coming, which you cannot even foresee. For example, today, finding a ship to send is difficult there. I mean, India is suddenly the availability of containers and ships has gone up. So just let all this kind of stabilize a little bit, and I'm sure that you can also foresee that the high raw material prices, tend to be a little bit of a deterrent, and in the lack of foresight to know when exactly would it go down and when exactly a particular consignment would go. So I think let that stability come in. Still the whole world is oscillating quite a bit. Yeah, there's a stability. We will of course share with you, absolutely. But it looks promising. That's all I can say.
Right, sir. Sir, and some sense on the online channel, how is it faring? Last time you said we were number 2 online, right? So how are we placed now?
Rakeshji, can you please take that question?
Yeah. So So online channel started much earlier than offline, and it is seeing bigger growth than offline. We are faring well. In fact, we are growing higher than the market growth.
And currently, what is its share, sir, in the overall sales?
So overall share in the mattress sales so would be close to about maybe about 5%, less than 5% right now. The mattress sales to online.
Okay, I think in Q1 it was around 4%, right?
Yeah, so it is around that. Yes, but looking going forward, I mean the rate of growth are much stronger than the offline for sure.
Got it. Thank you, sir. I'll join the queue for further questions.
Thank you, sir. A reminder to participants to ask a question, please press star 1 on your touchtone phone now. We have next question from the line of Manan Shah from MoneyBee Investment Advisors. Please go ahead.
Yeah, thanks for the opportunity and congratulations for a good set of numbers. So my question was on the raw material side. In a recent interview, we had indicated that TDI prices had moved up from 120 to 200 plus. So I just wanted to know if they have cooled off from then on or they continue to remain elevated. Also, as per our understanding, there has been a planned shutdown for TDI in Europe, which has led to this sudden surge in prices. So if that understanding is correct, and if we have any indication when that plant is expected to start, and are we facing any supply side issues in respect of TDI?
So you're right that it's 200 plus at the moment. It's actually precisely 230 rupees a kilo. But in the initial stages, the way it was rising, that has stalled for the last 2 weeks. And our belief is that it has reached some kind of an asymptotic level. The other piece of information that you say about the plant in Europe. So, even in the past, I mean, some plants going off and some plants coming in, somebody impacted by maintenance schedules and somebody impacted by a hurricane, etc. All this was there. But, in cases when there is a short supply, all this gets accentuated or gets bigger than the other, or really what it should have been. This is the one that you're referring to is a scheduled maintenance, which was probably decided a year earlier, and will be over in the next 10 or 15 days. Therefore, as a globe, whatever was the installed capacity, let's say a year back, and what it is today, it's not very different. But it's a supply chain issue and a mismatch issue, and till the time that kind of stabilizes, all these small little nuisances will have a lot of impact. But otherwise, it's I think it's reached its peak. Maybe another 10, 15 rupees sometime. Some trader can push that up a little bit, but otherwise it's reached its peak.
Just a follow up on that, the maintenance, the plant closure for maintenance, what capacity would that be? So should the prices correct a bit once that capacity comes online?
So look, that capacity will come online. Then some other capacity would be on a scheduled maintenance. Somewhere, something or the other will happen. But by and large, it's as I said, the current capacity, whatever is running and whatever is being consumed, is reasonably well matched.
Okay.
It's just the supply chain, and as I said, the mismatch in the supply chain is really the issue here.
So we don't face any supply side issue, right? Because you spoke about increasing our share with GNFC for locally procuring TDI.
That is right, but GNFC also gets a little better on that, and they have certain anti-dumping duties which have been levied, and they also increase the price when the global price increases, because for them the opportunity is also then to export,
Right.
And therefore, it's as I said, it's let's say the quantum remains constant for us, or at least shortages are not there, but the prices are of what would it be if imports happened, or what would it be that if they were to export and realize the price.
Okay. Okay, thank you. I'll come back in the queue.
Thank you, sir. We have next question from the line of Gaurav Jogani from Axis Capital. Please go ahead.
Thank you for the opportunity, sir, and congratulations.
Sir, I'm sorry to interrupt. Your voice is not very clearly audible. Please use your handset. Thank you.
Is it clear now?
Yes, sir. Please go ahead. Thank you.
Sir, thank you for the opportunity and congratulations on the great set of results. Sir, I have a couple of questions. First one being that we have now, this particular quarter, have hit the lifetime high margins on a consolidated basis. And the largely contribution is from the international subsidiaries, both Spain and Australia. So first wanted to know how sustainable are these margins, and I'm not talking about a short term, maybe a quarter or two, maybe on a 3 or 4 year basis. I mean, what measures have we taken, for hitting these high margins?
So undoubtedly, the majority contribution to the high margins has been, as I said, the interplay between stock and selling price and purchase price, and what happens first and what comes later. But to keep increasing the margins on a regular level, that is our endeavor. And let me say this, that once margins go up, the benchmark for you changes. For you changes, and for us it changes. But the current status, definitely. I mean, if you were to ask me straight away, is 24% of Spain sustainable? Of course not. But will it come down to 15 or will it come down to 18? I mean, all that part I cannot say right now. But I can definitely say that also. So it's that interplay which is there. And we should, probably the next quarter will tell us a little more into everything. Yeah. We'll have to wait till then.
Sure. So just a follow-up on that now, I mean, we are operating the Spain operations now for almost 3 quarters. So if you would like to highlight, what cost efficiency measures you would have taken in this while once we have taken over the operations, and how much costs you were able to save on a sustainable basis there?
Gaurav, the time that we took over, which was 14th of October 2019, and to the time that we're beginning to stabilize and do everything, it was suddenly, I mean, Europe, the corona came much quicker, which was like February, really. So there is, whatever we are able to do on online basis, of course, all that is happening. But at this point of time, let me just say that the stress has been more on capacity utilization, on making raw material available, etc. I mean, they have also, although they have not suffered on account of closure at any time, but they have suffered on manpower bit for sure. That fewer people were available, etc. So I think the last couple of months has been a struggle for ensuring that the operations keep running, the supplies are maintained, and the raw materials are maintained. All those things. Real hardcore cost efficiency measures will take some time. Yeah.
Sure, sir. And so the next question from my end is, like in this particular environment where you've seen sharp rise in the raw material prices, how has been the reaction from the competition per se? Have you seen some online players going out of business in this particular process? I mean, post-corona, were they not able to sustain these businesses in these challenging times because of the supply chain issues? Anything on that front you would like to highlight on the competition front per se?
So by and large, the major competition has followed suit. Of course, the raw material has been, both the availability and the prices have been as bad for them as for us, or in fact would be a little worse. Some smaller players have gone out of operation because of shortage of raw material. Both of, players who are in the offline side or on the online side, both have gone out. And I think it's also evolving. And I'm sorry, I'm using this word more often than necessary, or more often for virtually everything, but it's just the dynamism of the place. For example, on the MSME side, there are many manufacturers who are there. For them, the requirements to pay their installments, their interest, etc., was deferred by the government. All that is going to come to the fore in another month's time. When the deferment time would have been over and people would have to start to pay. So I think it's still very evolving. I mean, honestly, Gaurav, I can't give very definitive answers on this issue here.
So I would like to reframe the question in another way. So I would say, would you now consider your competitive positioning much better than what it would be 6 to 7 months earlier?
No. So I'm sorry, you'll have to restate the question. Competitive positioning, what does that mean?
I mean, sir, what I mean is that, in terms of the competition, what we were seeing, a lot of online small players were coming in, and, they were doing some price discounting and then selling, and some of which might have gone out now in this current scenario. So then in terms of, your pricing and other stuff, is it better now as what it was 6 to 7 months earlier?
I would say slightly better, but at the same time, the very nature of this online business is that people can come in and go out at any time. There is no fixed channel which is there. There is no relationship which is existing. I mean, it is just information which kind of happens, and either you go through Amazon, or go Flipkart, or go through any other marketplace. It's just an information that comes in. The customer also behaves very similarly. He sees a good offer today, he just goes and buys. So you could come in and go out. But have people gone out? Yes, people have gone out. Will they come in once the price is kind of gone? Of course they can.
Okay. Sure, sir. Thank you, sir. That's all for me.
Thank you, sir. We have next question from the line of Omkar Hadkar from Mirabilis Investments. Please go ahead.
Hello?
Yes, sir. Yes, Omkar.
Yeah. So my question is on the channel. You mentioned that September you had seen some good traction out there. Just wanted to know in terms of your channel, how much of it is functional in terms of pre-COVID times. How is it in terms of turnovers or any the inventory that you earlier had pre-COVID times, and currently how is that? Any color on that will help.
So if we look at September, I would say most of the markets are open. Most of our showrooms are open. There may be some small little restrictions on the timings, but by and large, they're open. As far as the stocking and the depletion of stocks and all that would have happened, they may have been a little bit empty, and therefore some stocking would have taken place. But we, as I said, that we do track the tertiary sales, so that's happening. And so, if one word answer, that are we back to pre-COVID times on the channel and it's functioning? Yes, we are.
Okay, great. So, and my one question is from the annual report. I was just looking at the standalone numbers. And there are a couple of subsidiaries. One was the Ebitda Software Solutions. So in that, last 4 years, there has been some investments that have, increased in this subsidiary. Just wanted to know the nature of these investments. And secondly, your aspirations on the IT side, the Stack Overworld that you had started. You have carved out some employees out of your current team. And so what are the plans there? And what sort of investments do you see continuing both in the Ebitda software and as well as this current IT subsidiary that you have carved out?
Okay, so the name of that subsidiary is called Stacko. And Stacko is also the absolute initial times. They are on a CV building kind of an exercise. But let me share with you that the orders have begun to flow small, but have begun to flow both from national as well as international arenas. And whatever is our target that we have laid down for this year, we would be able to achieve that. So it's taking shape, smaller orders, but some of the bigger names nationally have also placed. So be it Jubilant or Hero or names like that, and internationally also from various countries orders have started. And we are absolutely on track as far as that is concerned. Ebitda, the investments which have in the last few years, that maybe Dhruv, you can answer that question.
I can answer. Ebitda Software, the only investment is in our corporate office.
Okay.
The land was held by a company called Ebitda Software, which we acquired.
Yeah.
And then there is no other investment. It is only our corporate office.
Okay, so the something from the 20 crores to 76 crores order in last 4 years, that is largely towards the corporate office.
That's our corporate office.
Okay, and so but any further investments out there? Do you see in a couple of years, or as current the 76 crores odd should be the
not much. It's almost complete, and it's barring some additions, but not much.
Not okay. Fair enough. Yeah. And sir, just on the other Stacko part, also you had also mentioned that government would also be looking at some government orders. I just wanted to know your thoughts, because most of the other players, service providers, have not made money over a period of time in the government orders. So how do you foresee that kind of a situation?
When I look at the range of orders that have come in, yes, there are some government orders, etc. But the way that we have been operating, we have a good margin, and the payments are secure, and most of them come up front. So the issue of not having margins, or the issue of not getting the money back is not there as far as the government is concerned. I mean, whatever the business that we are doing. But there is a reasonable size of government orders which are there.
Okay. Fair enough. That's it from my side. Thank you.
Thank you, sir. A reminder to participants to ask a question, please press star 1 now. We have next question from the line of Nihal Jham from Edelweiss. Please go ahead.
Thank you so much for the opportunity again. So just a couple of questions more. When you mentioned about Australia, that traditionally it has been a 2-3% kind of volume growth market. So is it just as you said, the trend of higher salience for home products which is driving the strong demand for foam, or is it that again there is a supply disruption in Australia which is driving our volumes there in addition to the increased demand for bedding products?
So as you know that in Australia, we are one step away from the consumer. We are 2 steps away from whatever is our understanding. I will share that with you. There are 3-4 things. Number one is the Australians like to travel across the world a lot, and which was not there. And that's the travel industry is about $65 billion industry. So all that money has been in people's pocket. Number 2, people have spent a lot of time at home and realize and recognize that I need a better mattress to sleep on, and more so because they have not been traveling and therefore spending more time at home. So it's one is saving that money, and the second is you're spending more time on your own mattress, which probably helps or sort of supports that side of it. And third, for sure, there is an impact which we have been talking about, which we'll call as the China factor. The imports coming in from China have been very erratic and with a lot of difficulty, and therefore people are looking at localizing, and though that's considerably more on the on the furniture side, but still sizable on the mattress side. And as far as we are concerned, in Australia, we are impacted positively by both these things, the furniture and the mattress.
Sure. So just approximately what would have been the revenue growth for Spain this quarter? I know we are not consolidated, but just as a sense.
For Spain?
Yes.
So that is, you see, we've got, as I said, that company merged in October. So you want to compare Q2 of Spain versus Q2 of last year of Spain?
Yes. Just as a sense of the growth in Spain. I know we did not consolidate it, but just as a sense of how the Spain market is.
I would make I don't have the numbers, but about 25%, between 25 and 30%.
That's helpful. Last question from my side. On the online side, when you mentioned our share of mattresses around 5%, just wanted to get a sense that most of it is driven by SleepX, or it's a equal split between SleepX and Sleepwell on the online side?
So most of it is driven by SleepX. We have decided to have that as our brand online. And though we do have a sleepwell.com or mysleepwell.com, and there is some sale, but the numbers on the .coms or sleepwell the .com or brand.coms is rather few or insignificant. The growth has been primarily on the SleepX side.
Sure, sir. That's helpful. That's it from my side. Wish you all the best.
Thank you. We have next question from the line of Hiren Trivedi from Axis Securities. Please.
Yeah. Am I audible? Hello? Hello?
Yes.
Yeah.
Yes.
Yeah, I'm audible now? Yeah. Okay.
Yes.
Thank you for the opportunity. Given the good performance for this quarter, how is you looking at the second half of the year? So will it be better than the last year, or will H1 be better than? H2 will be better than H1 this year, and how would you look at it? And secondly, the foreign subsidiaries have done overall very well. So is the share going to keep on increasing going forward? So what are your on the foreign subsidiaries going forward?
So on a consolidated side on H2 versus H1, of course, H2 will be far better than H1. H1, at least as far as India is concerned, the first 2 months or first 1.5 months was a complete washout there. So H2 will be better, and whether we will reach the last year's numbers is something which is a desire that we should try and end the year with at least doing that much. But we have to see that in the coming few months. On the subsidiaries, I can only guess that they will continue to work well here, and they will substantially or sizably contribute to the main company or to standalone numbers. Hello.
Yeah, thank you. Yeah, that answers my question.
Thank you. We have next question from the line of Resham Jain from DSP Investment Managers. Please go ahead.
Hi, team. Congratulations on set of numbers. Just one question. Given this increase in the raw material prices, is it fair to assume that Spain, Australia, and the India B2B businesses, it should not be difficult to pass on the price increases, the raw material price increases?
So if I'm understanding your question, that it should, or you're making a statement and saying that is that true or not, which is it should not be difficult to pass on the prices. So first, let me say that every segment has its own dynamics. When it's a B2B, the consumer or the customer is very well versed with the increases, and he tries to fight and say, try to push back, etc., because he also has ahead of him a customer to take care of, and obviously negotiate for. And in some cases on a B2B basis, there is some pricing related to rise and fall of raw materials. So it's a mix of that, but far more difficult to get any kind of price increases. On the other hand, the customer side of it is easier to do, but has long-term impacts. And the long-term impacts are that if your products become very expensive, you can be, sort of your market shares can keep depleting. Second, when the raw material prices also go down, for you to reduce prices in a consumer product is an extremely difficult phenomena. So you have to be a little more prudent in increasing prices. So I think both the channels, or both the channels, they have different dynamics, but we are able to pass on some, and the market has accepted that. Yeah.
Okay. Understood, sir. Because in the past we have seen actually TDI prices moving to 350 plus levels also, and at that time also we have been able to manage our overall margins at a much healthy level in terms of. So from that aspect, I was just asking it should be like a similar situation right now also, what we have seen in the past 2 years back.
Yeah.
Okay.
Yeah.
Thank you, sir.
Similar, and although at the same time the prices have not gone up to those 330 levels, and we don't wish and pray and hope that they would. So it's more like 230 at the moment, and I think they are stabilizing at that, and then hopefully some downward movement should happen.
Understood. Thank you.
Thank you. We have next question from the line of research from Carnelian Asset Advisors. Please go ahead. Please identify your name.
Yeah, sir. Hello. Am I audible?
Yes, you are, sir. Please identify your name.
Yeah, my name is Hamid Dusani. Thank you for taking my question. My question is guided towards realization for mattress. If I see last 2 or 3 years, the realization for mattress has come down from 6,000 to around 3,500. So can you, just highlight, what is playing out here? Is it only because of the starlight of the low economy brands, or is it something else? Because I realize that we haven't taken any price cuts, right?
So, Rakesh, would you take that question, please?
Yeah. So there are two. One is that just for uniformity, now we equalize the number to a single size mattress. So all the units are equalized to a single size, which is 6 feet by 3 feet. That is one. Second is that we have opened up MBO, because as far as people is concerned, we have all the EBOs selling the products. So we have opened up MBO channel as the new channel for Starlight and for Featherfoam products. So that is the incremental sale that we are getting from that channel. So therefore, you see this difference. So as far as EBOs are concerned, there is the drop in the ASP is not much, because there the presentation of single product is at a different level. It is the MBO mattresses which bring down the overall ASP, and which for us it is an incremental business.
So can you, sir, highlight what was the comparable number for 2 years, in the past, for FY18 or 19, the ASP?
What I would suggest, this can be given to you offline, because as you stated, just a minute, that we have converted every mattress to one size now. So we will we'll have to work out the prices and convert all those into one size to come make comparable picture.
All right, sir. That was helpful. Thank you.
Thank you. We have next question from the line of Siva Kumar from Unifi Capital. Please go ahead.
Yeah, thank you for the follow-up opportunity. Sir, what is the current size in terms of the MBO network and the EBO network?
Can I take that? 4,200 are EBO and 7,400 are MBOs.
Got it. Sir, my second question is with regards to the dividend policy. Last time we had conserved the cash because of the pandemic situation that was prevailing. Now that we have come out of it in a good shape, is there a rethink from the board on dividend policy or a buyback or use of this cash for some inorganic growth?
We just finished a board meeting, but I think that at this point of time, the other issues have been of far more importance and relevance. So in the next board meeting, which is in February, we should be really addressing both these issues. So at the moment, as I said, that it was not even a part of the agenda.
Okay. And any acquisition opportunities on the table, sir? Typically, you keep having some 2-3 opportunities on the table. Is that the case even now?
Shiva, yes, some opportunities are already there, but I think they are relatively weak opportunities, and whether they would go through or not. So I think all companies, and whether they want to sell or buy, or the decisions on those things have been kind of just deferred by a few quarters here. So yes, we are in contact with a couple of them, but they're all have different important things to deal with at the moment. So there is nothing actively going on.
Right, sir. Thank you, sir, and all the best for the second half.
Thank you. Thank you very much.
Thank you, sir. Ladies and gentlemen, that was the last question. I'd now like to hand the conference over to the management for closing comments. Over to you, sir.
So, Vismay, thank you once again for conducting this well and closing it in good time. Most questions were as incisive as always. A huge learning for us and for the team. Thank you very much to the markets for supporting us and being there. And I'm also wishing and hoping and I think all efforts will come to fruition that we continue to perform in the changed circumstances. We fully recognize that world is not going to be like it was before. It's not going to be business as usual. There are many changes which are happening, and we should be able to absorb them and use them to our benefit. So with those words, I just want to wish you all a very happy Diwali and look forward to meeting you